Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 27th of January, 2026. After the long weekend, a fair bit's happened. I'm Mark Gardner. Look, upcoming Fed meeting, upcoming tech earnings, and obviously geopolitics is very much keeping the market on edge. We've had a massive rally in the precious metals, particularly silver, making a 117 blow off top last night. Has been cratered since, down to about 103 in the aftermarket. I don't think there's anything necessarily to do with an announcement there. However, we're because those blow off tops are quite common. Although pretty severe move in terms of stocks here. Realistically, not a huge amount happening overnight. I think we sort of finished a little bit higher as sort of Trump took his foot off the geopolitical pedal a little bit. But we got Tesla, Microsoft, Meta, Apple, all reporting earnings this week. So early on in the picture, we're probably not probably not a great reflection on what's going to necessarily happen moving forward. There wasn't too many earnings overnight. Dow ended up recovering. They were down quite a lot early. But the Dow down around about in the futures about 0.5%, but then ended up finishing up anywhere. The Dow up 0.3, the S&P up 0.5, and then the Nasdaq 0.4. We were closed, obviously, and the SPY's up about 39 odd points at this stage. Nikkei, there was talk of yen intervention yesterday. The US dollar's getting pretty smacked up. Which doesn't surprise me because, for anyone who's listening to the podcast, you don't need me to necessarily repeat myself here. But look, I think it's more about what's happening ahead. We go to our obviously the gold and silver, and look, platinum actually got a little bit smacked up there into the death. Still up 8% for the 5 days, but it's probably pulled back the most. I think silver. I think platinum's very much lagging here at the moment. Probably a pretty good opportunity to be switching. But gold got to 5,100, and sort of still holding in there. Silver obviously 103, but we weren't even. I don't even know where we were 2 days ago. I think we were somewhere around the 98, 97 region. It's obviously since gone $20 since then and come all the way back down. They do tend to mark short to medium term highs, those sorts of blow off rallies, and it's a little bit unfortunate, that we've managed to miss that yesterday because we would, I suppose I think silver's around about the same price, but for those of you who are long platinum, a touch disappointing, but gold's still hanging in there. But this is just all, look, uncertainty tends to feed precious metals. Precious metals have been going ballistic. So I just did a chart up here over the weekend on how much is left in these precious metals rallies. History says there's more to go. So the best two 24-month rallies or 2-year rallies in precious metals. So I basically got the record 2-year gains and then the second best 2-year gains in both silver, gold and platinum. Then I gave a bit of an average for context because obviously silver's rally was kind of to do with the Hunt brothers and cornering silver, etc. So 700% was probably a little bit extreme. I think platinum and gold's record 2-year rallies are a little bit more a little bit more in line with reality. But silver at the moment, I would say really all of them are on record 1-year runs. So I think that somewhere around here we're starting to look at potentially, particularly in gold and silver, looking at probably taking some profits and heading back towards either gold miners or silver miners in particular. And maybe some platinum. There's still 40% to go realistically in the average in platinum, but the gold, the gold to platinum ratio very, very much lagging at under 2 to 1 here at the moment. Just around that 2 to 1 here at the moment, which is historically pretty low. It usually trades 0.8 to 2, but yeah, we're there could be some more to go. look, my gut feeling is silver's that real high in silver was probably more around the 500 mark. So we're probably around about there at the 400% mark, which was up 114%. Sorry, up at $114 last night. I think that could be a short to medium term high, and we could start to pull back a little bit in silver because everyone's been sort of shaken out, and there's but it'll be yet to be seen. As I say, I think the miners and I think platinum are probably your safer bets now in this precious metals rally. Just on our risks list, Greenland, EU-US relations obviously got crossed off the Trump risk list, or pile as I'm calling it. Although the US government shutdown, we put this up when it was 10 days away, so 6 days ago, is only now 4 days away. Polymarkets has now got that at 75%. No one was talking about this last week. In fact, I got some pretty strange looks from people when I was bringing it up. Obviously, they can't operate a calendar and remind themselves moving forward. And we still haven't seen any of these Supreme Court decisions on legality of tariffs and Fed appointments, etc. So, Japanese bond yields with this yen intervention as well, and obviously US dollar yen getting smacked up yesterday. There's a little bit of that yen carry trade concern. So, still a fair bit of risk on the table. And I suppose you could add to this the mega cap companies' earnings this week. But to be honest, I don't see them necessarily as a risk because those guys just keep making. I'm not concerned about American companies making money. All I'm concerned about is, you want to buy American businesses, you just don't want to buy them in US dollars, because I think Trump's just going to. While he's backed off a little bit here at the moment, these ICE shootings have escalated, which is going to make this government shutdown an absolute circus again. That's going to be coming up later in the week, obviously, when the shutdown happens again. It's not good for the economy. It's not good for any sort of certainty. Add to that Fed chair and and Trump having a spat. I mean, again, you'd be. I would say small caps did rally quite hard, but I got to say, for the first time ever, I think there's probably a fair bit more safety in the mega caps. If we start to look a little bit lower, but yeah, in terms of this week, I think cash is a pretty good position, and we will obviously start looking at. There's a few announcements around some more government funding towards these rare earth and critical minerals projects and refiners, etc. I think that critical minerals piece will continue. It's obviously what Trump's scrambling for, etc. But in terms of the Aussie market, there'll be a fair bit of volatility here I would imagine on the open after the break. But it'll be interesting to see how it pans out. Overall, don't have any real strong leads on where the Aussie's going to go this morning, given that. Given the public holiday break and the level of uncertainty that's in this market, is probably not a massive buyer of anything much at the moment. Just from a wait and see attitude, and I think that having some cash on the sidelines is really going to help take advantage of those potential opportunities moving forward. And don't forget, we've got Aussie earnings season coming up. Starts in February as well. Should be starting to review your books and your portfolios and making sure that you're, that you've got anything tidied up that you want to take off and moving on from there. So here's the calendar for the week. United Health actually has reported dropped 8%. Haven't seen a story there yet, or haven't had time to find a story there yet, to be honest. But we've got CPI here in Australia, which will be really key for our rate outlook. We've got an FOMC meeting will be Thursday morning, so last opportunity will be tomorrow to be getting out of any positions there. European employment and PPI on Friday as well. But you've obviously got Apple, you've got Microsoft, you've got Tesla, you've got all the oil companies, you've got IBM, you've got three of the bigger defence companies as well. So plenty going on this week. ASML as well, which is more that foundry photolithographic machines that do the high grade chips. So there'll be plenty to watch out for this week. So very, very good to be make sure you're organised and make sure you got your head around your holdings and the and the key announcements, company earnings and economic figures, because if one thing's for sure, we've got Japan making big announcements in our session, and any major yen carry trade unwind could freak the markets out, and Trump just generally could decide he's going to declare war on Brazil or something. Who knows? I mean, I'm joking for the record, but you just never know with this guy. So I think him chickening out at Davos is, he'll come up with something to distract from these ICE incidences in the States and the government shutdown issues, and try to take his distraction global, I would imagine. But I missed any sort of, I don't know whether there was a press conference this morning. I missed it if it was, but there is certainly a lot going on. So I think cash is a very valuable position as it stands at the moment. So guys, the special 1 month free trial is only until the end of this week, where you'll get all of our recommendations for a month. So go to mpcmarkets.com.au/mosaic or mosaic.mpcmarkets.com.au. You can sign up to get your 1 month free trial and get all of our recommendations, the 4 recommendation services, both ASX, high conviction, US, structured investments, everything. So, which have been doing extraordinarily well. Please follow us if you can on Spotify, YouTube, or Apple Podcasts at MPC Markets, and stay up to date, because it is pretty busy and you've got to stay on top of things, particularly with these massive moves. And you'll get all of these webinars that we've had over the course of the last few months. Robotics, hyperscaling AI, defense stocks, and our market outlook for 2026. Both are on Mosaic, but they're also, you can register for them and see any of these on demand at mpcmarkets.com.au/webinars. Thanks for listening this morning, guys, and we'll speak again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.